All right, it's the 16th of June and it's a Monday. And we've got about, less than 20 minutes for the NY Open. Yeah, let's go to the charts. Okay. All right, just give me a second.
Have you ever seen that video? No. Pull that video up.
Okay, let's start with the calendar. So this week, um, we've got retail sales tomorrow, and then we've got the interest rate decision, FOMC meeting minutes, and then Thursday is a holiday. Yeah, Thursday is a holiday, and then Friday there is no news, right? And then next week there should be nothing. Yeah, no news, right? So again, this is the third week of the month. As expected, we have retail sales, interest rate decision, and FOMC meeting minutes to look forward to this week. Sound okay? Yeah, I think so. All right. Okay, let's take a look at the weekly candle, how it closed. Right, so the weekly prediction was that we closed with a very small wick at the top for the weekly candle, for the next candle to fill, right? That was prediction on Friday, or we close with a bigger wick, right? Which means the daily would have to push down. So what happened was the price pushed up, and the daily, we said the daily is going to close bullish either way, because price had already moved past the high here, so we were going to close bullish. But is it going to close a small body candle or a large body candle? And it did close a large body candle. And today in the Asian session, we broke above the high and we tapped 3450, right? So the prediction, Friday's prediction played out pretty well. And there were buys on Friday. We'll talk about that in a second. But now on the daily, what's happened is, just a second. On the daily, what's happened is price is reacting to a fresh demand level and are very likely going to push down, right? So for example, if you look at we've come above this high, we've come to 3450. At 3450 is a 4-hour and a 1-hour zone. There's a zone right there on the 1 hour. It's very clear. Yeah, that one right there. So we've come to that area. That's exactly where 3450 is. And that's visible on the 4-hour and the 1-hour, and it's a daily wick basically. We've come into that wick because this wick, we rejected 3500 and 3450 with this wick, right? So we've come to the first level 3450, and we are getting a reaction there. So we're very likely going to get a push down, right? I'm not sure if it's going to be a reversal or a pullback, but we'll have to see. Right, let's go to our trading chart. Let's get rid of this. So on Friday, yeah, this was a trade. Price came into a liquidity candle. We created 30-minute support, and price pushed up, back up here, right? I think I got out somewhere about here. Yeah, at this supply zone, drop, base drop. I got out somewhere here, got in somewhere about here. It was 150 pips. and call it a day. That's on Friday, right? Now we've come up in the Asian session, create a 30-minute resistance. Uh, as soon as we got here, pull back, grab liquidity from 3450, and we've dropped, right? We've already dropped 400 pips. We could continue to drop further. All right, let's get rid of these. Okay, let's get rid of all of this. Just we'll start with a clean chart. Right, let's start for the 4-hour time frame. That's the zone that price is pushing down from. This zone right here, right? This is a zone that I showed you on the previous chart. That's where we're pushing down from. We should continue down. We should come here. We should be coming here. At least another 200 pip drop. Okay. So here we have a rally. These are all basin candles. 1, 2, 3, 4, 5, 6, and then a drop. Okay. So let's start with that. Let's take a look at this on the 1 hour as well, since we've crossed a weekly SR level. Okay, so maybe on the 30-minute. Yeah, I think that's good. We'll include that demand. We'll include that supply zone there. Base and a drop, right? Yeah. So the high is 119, 765. Okay. And then here we're going to extend this to the right. Let's just take a look at this area very quickly. Yeah, we should be coming below this. I'm going to mark this zone here again. Mark the zone here. We had this marked last Friday. I'm going to remark it. This rally-based rally, because we've come off a round number here, right? So that's the reason I'm marking this rally-based rally. We come deep into it. Maybe we can adjust it. Bring it down here to that. 30-minute. Yeah, that's good enough on the 1 now. So the open is 401, 370. Okay. Right. Yeah. And then these zones, I'm going to extend these to the right. Perfect. We tap off the liquidity candle and 3450 and drop 400 pips. Asian session. Yeah, that's good enough. It's a Monday. It's a Monday. Okay, so we have two new zones for today, right? We have a zone here, which is a 4-hour zone. It's a 4-hour supply zone. And then we have a 30-minute demand zone here as well. That was from Friday. Okay, right. Let's take a look at these zones and see if they're high liquidity zones, right? Let's start with the supply. Yes, price has taken out this demand here on the way down. That's a high liquidity zone. And this here, we've taken out this high, this rally, and this drop. On the 30-minute, there should be a basin candle there, sort of. But we've pushed up, we've taken that high. So this is a high liquidity zone. Now price has come fairly deep into it, 126 pip zone. We've come 87 pips of the way into it. But I'm going to leave it. That was when we tapped it the first time. Second time we haven't come through, but we could push straight through. Right? That's very possible. Very possible. Okay. Right. Now, let's look for a liquidity candle in these two zones. Right? Let's start with the 1 hour. Let's start with supply. Looking for the largest bearish candle. Would be this one for now. 206 pips. Yeah. Start with that. Let's take a look at the 30-minute time frame. It's still that candle. 157, 216. Let's go to the 15-minute. One 63, 133. Zero 05, 10. Let's take a look at the 5-minute. One 35. Yeah, that's the one. 997, 693. Yeah, perfect. We came back, we tapped it, and then pushed down in the London session. That's the candle. Okay, let's take a look at this area here. The liquidity candle has been tapped several times. 1, 2, 3. But let's redraw that candle. 144 pips. Look at the 5-minute. One 124. Yeah, that's the one. This 5-minute candle right here. 248016. 016248. Yeah, good. And price has come. That's a 122 pip candle. We've come 43 pips. So we could get a push up again. Could be. Let's see. Depends on how much volume there is. If there's not much volume today, we could create support and push back up. That's very possible. All right, that's it. That's the analysis, right? Those are the zones for the NY session. Any questions with regard to this, with the zones, with the analysis? You can always drop a message in the chat and I'll answer. So we have a 30-minute demand zone here with a high liquidity candle right here. We have a 4-hour supply zone here with a high liquidity candle, right? And it's just 140 pips between the two, right? Probably even less. Yeah, about 125 pips, 130 pips between the two. Not a lot of volume. On the 4-hour, yeah, just kind of ranging here. All these candles are going sideways. We're either going to get a push back up and a drop, or we're going to just continue to drop. Let's see. Okay, all right, let's take a look at what price has done in the Asian and London sessions. That's the market open. Market open, a big push up, 179 pip push up. Market opened at 34.33, roughly 34.33.3, and a push up. Okay, 119, 328, 040, 954. Remember, it's a Monday. Don't try to force a trade today. We should have volume tomorrow. Tomorrow is retail sales, and then even if you don't have too much volume tomorrow, volume should start coming in Wednesday. Thursday is a bank holiday, yeah, so maybe Wednesday, Friday we'll have volume. Okay, so this is the NY Open, yeah. Let's take a look at what price is done. Take a closer look at what price is done. Right, so what happened on Friday? Yeah, Friday we were bullish. Where was it? Yeah, we were bullish on Friday, right? So second half of NY session, we were bullish. Price was pushing back up, trying to head to 3450, and the market opened. It just pushed up 179 pips straight up to 3450. Tap the liquidity candle, tap the liquidity level 3450, and create a 30-minute resistance, and then a 30-minute back candle close. This one right here. Price came back up, tap liquidity again, the liquidity candle, and this needed more liquidity, then pushed down, started the descent, 400 pips down, right? So when it did that, it created the Asian high just above 3450, pushed down, tapped the EMA, created the Asian low, pushed back up. Yeah. And on the NY session, in the NY session on Friday, we created a liquidity candle here on the way down, right? So anyway, pushed back up, came above the liquidity candle, pushed back below the EMA, below and closed below the Asian low, came to 3430, closed below 3430, range there a bit, pushed down, swung back up to 3430, created the London high exactly at 3430, pushed straight down to the liquidity candle, right? This previous 30 that was drawn on the 5-minute time frame. We had this 30-minute zone on Friday as well. Came back there, formed support, and we've just been ranging ever since we came there, right? Just been ranging, we formed support, pushed up, came back, formed support again, pushed up, and now, yeah, for price to push up, I'd like to see price break below these lows. There are no sells here. I'm not going to be looking for any sells here because we are at a liquidity level. And we're below the EMAs. I'm not to be looking for sell here because we're at a demand zone and a liquidity candle. So I'd like to see price push past these lows, then close back up, create 30-minute support, and push up. That would be a temporary buy trade, and then the sell trade would be ideal sell trade today for the day or for the session would be for price to continue further down to 3,400. But you could get a push up and then a push down later on. That's possible. Okay. Okay. Yeah. So today there is no news. So we're going to wait. Any questions on anything that I've discussed so far? Hi. Yeah. Welcome. Welcome. I haven't forgotten the. Yeah. I haven't forgotten the lesson. We'll do that in a bit. I promised a lesson on Friday. I promised a lesson today, and we'll do that in a bit. Yeah. So again, what I'm looking for is basically wait for 30-minute support to form and a tradable 30-minute bull candle close to take a trade up. I would like to see these lows being broken, price push past these lows, and then a close back above the London low, and then a continuation. We could get that, or price could just continue higher, tap this, create 30-minute resistance, and then begin to push down. And if that happens, then that's a sell trade to come down, right? If you reject, if you come back to 3430, which is a London high, if you reject that area and begin to push down, or if you come even further up and reject, then that's a trade to take the sells down. Because we've broken below these lows, we've broken below this low, we haven't broken below this yet. I'd like to see price come down, break below this low right here, close back up, push up, create 30-minute resistance, then a trade to come back down to 3,400. That'll be a great trade if you can take that. 250 plus pips, right? Let's see, that might play out. Keep that in mind. Keep these setups Whatever I've explained, keep them in mind. Uh, they're likely to play out, right? So just watch how the candles close, watch how structure forms, and see if those setups play out later on, right? After the 4-hour candle closes towards the London close. The London close is at 12 noon EST. Okay. All right. Since we're waiting, let's discuss these setups that I look for. Okay. So there are 4 main setups that I trade. I mean, you can trade as much as you want. There are many setups. You can trade as many as you want, depending on how you read price action, depending if you use indicators or not. There are many ways to trade the market, right? There is no one way to trade the market. There is no one correct way to trade the market. There are many ways to trade the market, right? The question is, are you consistently profitable or not? That's the only thing that matters. Are you consistently profitable or not, right? And consistent profitability has more to do with risk management than your entry method, right? It has more to do with risk management, and we'll talk about that later on. But for now, let's just discuss. So let's discuss these setups, right? So there are 4 types of setups that I look for in the market. I'll put this PDF in the group. If you're in the group, you can just download the PDF. I'll put this PDF in the group. Just give me a second. Yeah, let me just put this in the group now. And then and if you don't know how to get into the group, there is a link in my bio or in this YouTube video. Just below the YouTube video, you'll find a link how to get into the group, right? Just click on that and you'll go straight into the group. Let me attach this. What's this? Okay, so it's there in the group. You can download it from there. All right. So now let's talk about the first one. All right. This is one of my favorite setups. Right. Now, in the New York session, so which means starting 8 a.m. EST, 8 a.m. onwards, if price creates a new high, right? If price creates a new high, there is a high probability, quite a high probability, I would say 75, 85% probability, the price will retest that high, right? Maybe not right at the high, but it'll retest the resistance level of that high, right? So maybe not uh, the wick of the high, right? It could test the wick of the high and push even further, but it'll at least test the resistance level, or it'll test a supply zone that's created before the drop, right? So if price pushes up, creates a new high, what I look for is I look for a price to push down, create 30 minutes support and a tradable 30-minute bull candle close to take the trade to go back and tap that resistance level or even go further than that high, right? So let's try to look for an example of that. Okay, here, just on Friday, there's an example of that. Perfect example on Friday, right? This is the NY Open. right? IC markets time, 1500 hours IC market server time, 8 a.m. EST. Price pushed up, created a new high, right? This high is higher than this high. This high was created in the Asian session. This high is higher. This is a new high. Price pushed down, created 30 minutes support, came back. First it came here. This is the area that you would want to take partial positions at that resistance. Or if there's a supply zone below here, just like I did, I took out partial positions here, and the market was slow anyway, so I just got out here. I took everything here because it was a Friday. But you could take partial positions if there is a supply zone and hold the rest for the resistance there, right? So the round number there would be 3443. That would be the round number, right? 3443 is where you would ideally want to take your first TP at, right? On a regular trading day. All right, 3443. So you wait for price to pull back, create 30 minutes support, right? Ideally that will happen at a liquidity candle or a liquidity level always. It will happen at one of the key liquidity levels always, right? That's very important to wait for it to happen at a liquidity level. That's better. If it doesn't, you still can take the trade, but maybe risk a little less. So if you're risking 2% on your if your usual risk is 2%, um, and price and it forms 30-minute support and a 30-minute tradable candle closes, but there is no liquidity level, right? Then probably risk 1% instead of 2%, right? Just a second. Let me also put this up. Yeah. So these are the liquidity levels. 5 key areas where I find liquidity on a price chart. Okay. So this price came here to the EMA is perfect. It formed 30-minute support, and there was also a liquidity candle here, and then price tapped deeper into the liquidity candle, and below the deeper into the EMA, and then pushed all the way up. Right. So that was a good trade. You could have taken that trade. I did take it based off the 15-minute time frame. So I use a 15-minute time frame and a 15-minute fib, right? It's not your default fib, and I've showed so many times how to draw the fib on this. We'll do that all now. Okay, so this candle closed at 1700 at 1900 hours IC market server time when this one opened. So if you go to the 15-minute chart, yeah, right here. Now, price went below this. Yes, you could have closed partial positions, and you got to keep, because as I always say, the safer stop loss is under the liquidity candle. So we had a liquidity candle here. I can't remember exactly where that was, but there was a liquidity candle here. To the left, if you watch Friday's stream, you'll be able to pinpoint where that liquidity candle was. Price came deeper into that and then pushed up. Okay. So you could have closed partial positions and kept the rest, and price did eventually start to push up. When this 15-minute candle closed back above here, you could have put that risk back on. That's possible too, right? If you close some risk, if you manage your risk well, then you can put that risk back on, and that's what I did, right? And then price pushed up here. I think I got off somewhere there. I think I had entered somewhere here. I got off somewhere here. Yeah, about 138, 140 pips. And then price continued to push further, then dropped back, came to 3430 and head high, right? So anyway, where were we? That's the first trade idea or the trade setup, okay? Wait for a new high to be created, wait for price to pull back, create 30-minute support and a 30-minute tradable bull candle to close to retest the high. Okay, now sometimes it might not go past the high. Sometimes if there is a zone here, it might not come to 3443. It might not come to resistance. If there's a zone here, price could have, it'll come to the zone and maybe push back down this. That is why if you have a zone, you got to take partial positions, right? Here there is a clear supply zone, right? There is a drop base drop. It's a 30-minute supply zone, so you can take partial positions at that zone. Okay, so that's the first, and the opposite of that, the opposite of exactly what we discussed, are for sells. So if price creates a new low, pulls back, creates 30-minute resistance and a 30-minute tradable back candle closes, then you can take sells to come down. Let's see if we can find an example of that too. Yeah, we're still ranging. There's nothing happening right now. 30-minute support may form. I'm not keen on taking a. If 30-minute support forms here, I'm not keen on taking a trade because price has been at this level for a long time, right? And we could easily push past. I would like to see. That's what I would like to see. I would like to see price go below this level here. I would like to see price break this low below 3407.5, and then we close back above and then go up, right? If it doesn't happen and price continues higher, that's fine. We'll look for sells later on, right? But I'd like to see price break below this low and then close back above the London low to go up. That's a better trade. Okay, so let's see if we can find an example for this trade idea, right? For the new low, then a pullback, 30-minute resistance form, and a tradable 30-minute back candle closes to take the trade to come back down and retest the new low, right? If you, I hope you've got access to this PDF. It's in the group, right? Okay. Let's see. It has to ideally happens when the market is ranging or in a downtrend. Hmm. Yeah, right here. Price is below the EMAs, downtrend. Price pushes down, pushes back up, creates 30-minute resistance. Now here, this is a little different. Price is very far from the EMAs. This is another setup. Okay, so let's ignore this because this is another setup. That's setup number 4. That's setup number 4. Let's not discuss that right now. I'll do 2 setups a day. The other 2 we'll do tomorrow. We were very bullish. To find a period where price was bearish. This is all price is very bullish here, pushing up. Mm. It's a bullish market for gold. Gold has been bullish for a while. Yeah, there aren't. Tough. Can't find one. But you'll find a lot of the you'll find a lot of these kind of setups, right? Because the market has been bullish. You'll find a lot of them. It's the exact opposite of it. It's the exact opposite of it, right? When gold starts to go bearish, completely bearish, maybe in this period you'll find. In this period right here, this is May. May you will find it for sure. Yeah, here you'll find, should find a setup here. Mm. New low created in pre-NY, price pushed up, created resistance, and went down here, but didn't come all the way down there. Okay, tough, not easy to find it. There's one here. We created a low, pushed back up, created 30-minute resistance, and then came down here to 3135 because that's a liquidity level, and rejected that and continued higher. Probably get them in the London sessions. Hmm. Yeah, Asian low, pushed up, created resistance, came back down. Pushed back up to that level, came back down. Okay, let's move on. This is the opposite of this. You'll see a lot of these in the last 2-3 months because price has been bullish overall because of the uncertainty in the markets due to the tariff war, due to Ukraine, Russia, due to Israel, Iran now. There's a lot of uncertainty in the market, so you'll see a lot of these kind of setup, lots of these, where we create a new high, pull back, create support, and go and retest the high, right? Okay, the next one, where we have a zone, a high liquidity, a zone, a high liquidity candle, right? That's what this is, a high liquidity candle, or a liquidity level, right? So any one of these, a high liquidity candle, or any one of the liquidity levels, right? And price, if it's a high liquidity candle, then it taps it. It could tap it, or it could go, further into it, and forms 30-minute resistance and a 30-minute tradable back candle closes to come down, right? Let's see if you can find an example for that. Yeah, we're pushing down. Okay, so this one, the Asian session. What happened today in the Asian session is a perfect example, right? 30-minute resistance formed. We had this is a liquidity candle. We tapped it, formed 30-minute resistance, 30-minute tradable back candle closed. Price came back up to tap this area 3450 and the liquidity candle and then push down 400 pips. It's a perfect example, right? You will see cleaner ones as well. You will see a setup like this where price, something like this where price taps a liquidity candle. Let's say there's a liquidity candle here. It taps it, forms 30-minute resistance and a tradable 30-minute back candle closes, and then price continues down, right? What was that? Okay. You'll find the PDF. You just joined the group, yeah? You'll find the PDF in the price action entry alerts topic under price action entry alerts. It's right there. There's a PDF. Just go click on price action entry alerts and you'll see the PDF. Okay, so that's a very good example. Now, you might get ones, as I said, cleaner than this. This looks a bit ugly because there's a bit of range here, but you'll get a cleaner, you may get a cleaner setup also. It comes in all forms. You'll have, basically what you're looking for is a tap of a liquidity candle or a liquidity level, 30-minute resistance to form, a tradable 30-minute back candle to close, and you can draw the fib, and you can trade however you want to trade. I use a fib, I use M15 fib model trade. You can trade a breakout, you can trade a surplus, lower time frame supply zone, you can trade however you want. These are in general the setups, right? These are the setups, right? Now, if you go to the next page, that's also the explanation of the setups, right? Are the entry rules that I use, right? So you would have heard me say this over and over again in the streams, where I say wait for M30 support and a tradable M30 bull candle to close, or for M30 resistance, tradable M30 back candle to close from a liquidity level. Then I say draw M15 fib before after M30 support resistance zone was created. So you're looking for the most recent M15 highs to be taken out or the most recent M15 lows to be taken out if you're looking for a buy, and you draw the fib and then you place your pending orders at the optimal and sniper level or at a better price, and you take your trade, right? And again, stop loss above or below liquidity candle, that's always safer, or the fib end, right? Or the fib end, and you know how the fib. So in this case here, We formed, this candle was a tradable 30-minute bear candle close. This closed at 3 a.m. Asian time. That's when this candle opened. So let's go to the 15-minute chart. So 3 a.m. is here. This was the candle close. So this one broke this high. This candle, let me just zoom in. This candle broke this high. This candle broke this high. So if you go here, draw your fib, perfect. Price came to sniper level. It went a little higher. As I said, your safer stop loss is always above the liquidity candle. I understand that you don't want, you might, I don't want to take that much of a risk, 150 pip risk. So so that's the reason you risk a small amount, and then when price begins to break resistant levels, like for example here, the resistant level is 3450, right? You can see how price 15-minute candle stayed below it. So if a 15-minute candle closed above it, you manage risk, right? Because no 15-minute candle has closed above it. So if this candle came up and closed above it, then you manage risk. Then you close 50% of your position, right? And you leave the rest, okay? But if price begins to, if you broke this high and you feel uncomfortable and you feel price is going to go straight up, you can close about 25-30% of your position at this fib band at 3450.16. You can close 50% of your position or 30% of your position. You can close something. I always advise to close something when a level breaks. This is how this is how I draw the fib. So if price breaks the fib end, then it's always better, always advisable, always a smart thing to do is to close 30%, whatever percentage you're comfortable with, but close something, right? And if a 15-minute candle, if a bull candle closes above 3450, because that's the resistance level, then you close another 40%, 30%, right? Whatever you're comfortable. So then if price pushes up, you're losing a very little. You're not losing a huge amount. You're not holding a huge amount in drawdown, right? And then if price continues to go high, you close everything, right? But you got to manage risk right at these levels when you see price going against you immediately. Immediately, when you go in drawdown, you got to find a level. It could be support or resistance. I also shared another another method based off price action on Friday of how to manage risk. Uh, If you if you want to listen to that, you can go there. I think in the I think somewhere midway about if you go to the about 1 hour 33 minutes into the video on Friday, about 1 hour 30 minutes or 1 hour 33 minutes into the video, you will be able to watch that part where I shared another method of how to manage risk, right? Based off 15-minute candles and 30-minute candles, right? And this is another method where you use support or resistance level based off the 15-minute chart and or the 30-minute chart and or the 30-minute chart to manage risk, right? So there would be a level right here. There would be 3450 would be a 15-minute or 30-minute resistance level, and you would manage risk there, right? So as soon as you break the high, you could close probably 25%. If a 15-minute candle closed to above it, then you close another 25, 35, percent, right? But it didn't, right? It pushed down after that, just continued down, and it respected that high, that last high it made, and then it continued to push down. And where did it come to? It came to first 3430 because price moves from liquidity to liquidity. Keep that in mind. Price moves from one liquidity level to another liquidity level, right? Because it's searching for liquidity to go in the opposite direction. That's all it's doing. So it came to 34, it came to the EMAs first, then it came to 3430, then it came to the next EMA, then it came to the liquidity candle. Because it can't find enough liquidity at these levels, at the EMA, the weekly SR level, or this EMA, or even at the liquidity candle. No, there's no liquidity candle here. It couldn't find enough liquidity at these three levels, so it came further down here. Right now, let's see if it has enough. If it's found enough liquidity, it'll form 30-minute support, and a 30-minute tradable bull 30-minute tradable bull candle will close for price to go back up. Right, that's all price does every day. Okay, so I hope that was clear. Any questions on what I've on anything I've discussed? The best time frame is mentioned right here. It's mentioned right here, right? 30 minute. Okay, 30 minutes. It says it right here. This is 30 minutes, right? So if you look at this, wait for a new New York high to form or a new New York low, and you can do the same thing in the London session. You can do the same thing in the Asian session. If you're not trading the US session, the same thing applies for the London session or the Asian session. And it says here M30, right? It says it's very clear, M30 support. So you're looking at the M30 time frame. And for the second setup also M30, right? So you wait for price to tap a liquidity level. It could be a weekly SR level, it could be a psychological round number, it could be one of the EMAs, it could be a high liquidity candle, it could be any. That's why it says any a zone. A high liquidity zone means this, a high liquidity candle. That's a zone, that's an area, right? So it's a zone. A high liquidity a liquidity level is a specific price level, like 3430 or 3450, right? Right? So a zone or a liquidity level. The EMAs are specific price levels. So if it taps an EMA, right, that's a specific price level. The EMA is not a zone. It's a tap of that line, right, to push up or to push down. I hope that's clear, right? And the same thing of this, the opposite of that is for buys. So a, if you have a liquidity candle and a 30-minute and price taps anywhere in that liquidity candle, right? Anywhere inside it. Let's see if we can find an example now. Let's see if I can find an example. Yeah, here on Friday, there was an example. We had this liquidity candle drawn on Friday, and I said exactly what was going to happen. I said, this is the liquidity candle right here. And if price comes there, forms 30-minute support, look to take the trade up. If you watch the last 5 minutes or 10 minutes of Friday's stream, it's very clear that that's the setup that I gave, right? So that's a liquidity candle, and this is a perfect example of this, right? Price comes into, let me zoom in a bit more. Price comes into a liquidity candle, right? Goes a bit deeper. It can come anywhere. It can go all the way into it. It can tap just a bit of it. It can come into the middle of it. Anywhere inside this liquidity candle. That's a liquidity candle. Forms 30-minute support and pushes all the way up, right? And I even said when it would happen. If you watch the last 10 minutes, I think, of the stream, I said what's going to happen when the 4-hour candle closes. I said we're going to be pushing down, and then later on there's going to be a buy trade to go up. And I think I even said the time. I can't remember, but I think I even said the time. Okay, so that's a perfect example for this setup right here, right? And I shared an example for this also. Okay, so these two we will do tomorrow, right? These two setups we'll do tomorrow. Again, the time frames always the time frame is always mentioned in the setup itself, right? It's all there in the PDF. Yeah, there is nothing happening. There is no volume. NY sessions have been very quiet over the last uh, 1 month, over a month. Been very quiet. Yeah, we're waiting. Got to wait for the 30-minute candle to close. Got 22 minutes for the 30-minute candle to close. I'm anticipating price to push down, to come below here. What's his low? 794. I'm anticipating price to come below this and then form. I would like it to come. I don't know whether it will, but I would like price to come below this low. That, if it breaks below this low, then that's kind of a confirmation that price is going to be bearish, and head further down, right? And the EMAs are very likely going to cross and head further down. Once you break this low, they're going to head to 3,400 and even lower. So that's what I'd like to see happen before I begin to look for sells. If that happens, then I'll wait for a pullback and take the sells down. I'm not very keen on taking buys. I'm not really keen on taking buys because price is reacting to, right, as I said, is reacting to 3450, which is there's a high liquidity zone there. There is a fresh demand zone on the 4 hour and the 1 hour. I showed all of that at the beginning of the stream. You can go watch the first 2-3 minutes of the stream. It's very clear. There is on the 4 hour, I'll show it again here. There's a zone right there, right? 3450. There's a drop, and there is a in between these two candles is a zone on the 1 hour. There you go. That's the zone, and that price has never touched that. That's a fresh zone, right? We came close, but we didn't touch it. See, we fell short. So now it's come and tapped it 3450, and it's very likely going to be continuing to push down. We could push down to yeah, we should be coming to 3408 easy. We should be coming to 3408. Yeah, it's about 430 430 440 pips. We should come there, then probably get a bounce. We should come here, 3407.94 or 3408. That's where this low is, 3408. I'd like to see price break that, then push up, form 30-minute resistance from a liquidity level, and then take a trade to come down. Okay. Any questions on anything that I've discussed so far? Any on the analysis or the two kinds of setups that we discussed? You can post a question in the chat. Yeah. Yeah, look at those candles, 50-minute candles, no volume. All 40 odd pip candles. It's no volume. No volume at all. 1 hour time frame, we're just moving sideways. 1, 2, 3, 4, 5, 6. Yeah, this is the 7th hour. For 7 hours, price has just been moving sideways. There's really nothing happening. Don't try to force a trade. Do not try to force a trade. Just be patient. I've shared very clearly what I'm waiting for. I'd like to take sells, but I want price to come to a liquidity level, create 30-minute resistance, and a tradable 30-minute back candle close to take the sells to come down, right? But before I take any sells, I'd like to see price break below this low, break below 3407.94 to take the sells, and then pull back and then take the sells to come down. It might take a while. It might take a while for that to happen. You just have to be patient. And in the process of that happening, you also could get a buy trade. Keep that in mind. There could be a buy trade as well. If price breaks below, closes back above the London high, the London low, sorry, and then continue higher, right? So you could take a buy trade as well, but you have to wait for candles to close. You've got to wait for candles to close. Right now, just dojis. We got absolutely nothing, right? So you got to wait for price to, if you want to take a buy, you got to wait for price to push down, probably break below this low, close back above the London low, form 30-minute support. As it closes above, form 30-minute support, and a tradable 30-minute bull candle close to go back up, right? And then you can look to take sells to come down. All right, I'll be back in a few minutes. Any questions, you can post in the chat. A good question. How do I know the London and Asian levels? Okay, that's a good question. Um, in any session, in generally, right now, this is not a, there are no certainties in trading, but generally, volume comes in at a session open, right? So in the Asian session, at the session open, so within the first uh, 2 to 3 hours, sometimes even 4 hours, you'll get a volume push, right? You'll have volume coming. Then same applies for the London session also, right? So the London session, so you have the Asian session. So IC markets, I'll give you the time or the hours based off IC markets because that's a broker that I use. Around 2:30 p.m., 2 a.m., 2:30 a.m., right? That's around the Asian Open, right? Anything between 2 and 3. Anything between 2 a.m. and 3 a.m. is kind of the Asian Open, right? So you're looking for a significant move or a swing low or a swing high, right? For example, let me explain what a swing low or swing high is for those who don't know. Um, the market opened here, pushed up, came to an area of interest, right? If you want to call these, you can call these as areas of interest. You can call, if you were to name these, you can call these as liquidity levels or areas of interest, right? However you want to name them. So it came to a liquidity level or area of interest, and we created, and there's a swing high here, right? So price pushed up and then pushed down. That's a swing high, right? It pushed up and then it pushed down. So that's a swing high, right? If it pushes down and pushes up, that's a swing low. This is a swing low, that's a swing high. Okay, this is a swing high, this is a swing low. So this is a significant swing high because price came in the Asian session. This happened around 3:15 a.m. IC market server time. So I said anytime between around 2 a.m. onwards, right? You start looking at the chart from 2 a.m. starting from the 2 a.m. candle onwards on the 15-minute chart. So we came to a significant level. We have a swing high, and that push down took price down to the EMA, right? So that's a significant push down of about 175 pips down. So hence, and that is the highest high within that time. So that's the Asian high, right? Then we came down here, and this is a significant push up from the EMA, because that's also an area of interest, right? So that's a swing low to push back up. And that also happens inside Asian trading hours, right? Within the first 2, 3, 4 hours of the Asian Open, right? Now, later on, these swings are not much. They don't really, it's a very small swing, like 20 pips, 25. You can see how significant this is. This is a 130 pip push up, right? You can see. So what you're looking for is volume. Volume defines the swing, the amount of volume, right? Defines the swing highs, the correct swing highs and the correct swing lows. I hope that makes sense. The amount of volume defines the correct swing highs and the correct swing lows, right? So there is a significant amount of volume here, about 175 pip, 75 pip, push down. That's a significant push down. That's a significant amount of volume from an area of interest or a liquidity level. Therefore, that's the Asian high. And this is a significant push up, right? If this wasn't important, price would have just continued down. It would just pushed down. It didn't need to do this. So the reason it did it is because that level, that area is important, right? So hence that is the Asian low. The same applies for the London. We pushed down, right? And then we pushed back up. Why did it push back up 80, 85 pips? It didn't need to. It could have just continued down, right? But it did push back up because this is important, 3430. Again, that's an area of interest and a liquidity level. So it pushed back up. So that's inside again the London. So it says London Open here. So you're looking at starting from around 7:45 a.m. IC market server time, 7:30 a.m., 8 a.m., any time in that area, right? Any candle in that vicinity for the next 3-4 hours, right? So price, we pushed up, we created a swing high, and we pushed to straight to the liquidity candle. So this move is important because this move pushed price 200 plus pips to the liquidity candle, right? It started with that high there. So that high is important. So therefore, that's the London high. And then we pushed here. We didn't break this low yet, right? Price pushed back up another 130 pips from this, and this is inside the London trading hours or within the London open hours, the 3-4 hours. So that's the London low, right? Did that make sense? Did I answer your question? So once you start doing them every day, once you start drawing these Asian highs, Asian lows, London highs, London lows, it comes naturally. The more you do them, you see them very clearly. It doesn't take a lot of work. You just need to practice probably about 30 of them. Once you practice 30, 35 of them, it gets easier. It gets easier. And the same with supply demand zones. The more you practice, once you draw about 100 of these zones, the next 20 zones get easier, and the 20 zones after that gets even easier, right? Um, that's basically price action. Now there are other kinds of price action. There are traders that don't use supply demand. They don't use liquidity. They use only support resistance. That's fine too. That's absolutely fine. There's nothing wrong with that. You've got to find a system that fits you. Fits your personality, fits you, something that you're interested in, something that you like to do, something you find interested to do, easy to do eventually. It's not easy at the beginning, but it'll get easy. But something that keeps you interested, right? You've got to find a system that keeps you engaged and keeps you interested. If you do that, then you can use that system to trade. But if you find a system, let's say for example, if you find a system that's overcomplicated, that has too much of analysis in it, too many big words you don't understand, and you get a headache trying to analyze the chart in that same method every day, then you won't practice, you won't backtest, you won't forward test. You won't spend 30 minutes on a weekend, or at least 30 minutes to 60 minutes uh, on Saturday, Sunday, going back on the chart, looking at and drawing those zones. You won't do any of that. Why? Because it's too complicated. So you got to find a system. It could be anything. It could be an indicator. It could be a bot. But you got to find something that you find engaging, that interests you, that will keep you learning, right? And if you take a trade, and what I always do, and I do that to this day, I always go over my trades on the weekend, right? So I spend 30 minutes, 20 minutes. Now it doesn't take long for me now. It takes about 20 minutes on a Saturday. I look at the I look at my trades. So I'll probably take about, let's say, 4 trades in the week, right? 4, maximum 5, if I get a trade every day, right? About 5 trades, about 5 setups. That's what I mean, about 5 setups, right? Like it'll be like one of these 5 setups, right? In the PDF, right? It'll be one of these 5 setups. So all I have to do on the weekend is go over these 5 setups, or 4 setups, or 3 setups if I've taken those trades. And some of them will be losses, some of them will be wins. And if I look at the losses, I just have to see, okay, what did I do wrong? Did I miss something? Did I not see? Did I trade a wrong, 30-minute tradable bull candle, or a wrong 30-minute tradable, bear candle? What can I do to prevent it? Or can I do something? Maybe I can't. Maybe that's the probability of that trade losing, because every trade has a probability of a win and a loss, right? So it could just be that trade was meant to lose, and I can do everything right, and I would still lose in that trade, right? And then if I have a winning trade, I look at those winning setups and I see, okay, how did I do everything right? Is there a way to make it better? Was there a better entry, right? Like I draw the fib. So if I draw the fib, like for example here, this Asian session trade, for example, let me draw that again. Here, right? So I didn't take this trade today because I didn't trade the Asian session, but here, if I look back at this trade on the weekend, then if I had taken this trade and I took my entry here, is it possible, could I, because there's a liquidity level right here, 3450, should I have, split my entry and taken half of my entry at 3450? Because there's a liquidity level literally just above, about 18, 19 pips above the optimal entry. So could I have, or should have I done that, right? So those are things that that will come when you spend time over the weekend, just go over your trades. And to do that, a system has to be interesting to you, has to be engaging. If it's too complicated, you're not going to spend time on the weekend. You're not going to spend time back testing. You won't do any of that. But if you find a system, or if you find a trade plan that's interesting, or a system that's interesting, then you will back test. You will go over your trades over the weekends, right? Is liquidity the same as fair value gap? I have no idea what fair value gap is. Maybe you can teach me what fair value gap. I have no idea what fair value gap is. I've really I have no idea. I'm sorry. How many long volume candles can be seen as a liquidity candle? What do you mean by that? How many long volume candles? I don't understand the question. Like in this zone, I start, so like for example, okay, so there's a 4 hour zone. Let me just do this again. Let's look at 30-minute time frame. Yeah, we are forming support here. We are forming support here. Mm, we are forming support here. Got to see if I want to take a trade here or not. Okay, so I don't know if this will answer your question, but let me try. Here there is a 4 hour zone, right? There's a 4 hour zone here that we identified. That's a 4 hour supply zone. And the next thing I do is I see if that zone is a high liquidity zone or not. And how you identify if it's a high liquidity zone or not is to see if it has taken out an opposite demand zone, right? And in this case, it has, right? We pushed this zone right here, pushed down and took out this demand, took out this demand, and even took out demand here, right, on the way down. So that's a high liquidity zone. Then the next thing is you look for the largest bear candle. That's your high liquidity candle. So you start from the 1 hour and you work your way down. So on the 1 hour, this was the largest, right? This was the largest candle, right? That's a 206 pip candle. All other candles are smaller. Then you work your way down to the 30-minute time frame. Then you see what's the next largest candle, right? Then maybe it was this. I don't know, 160. No, it's still this one, right? That's still the candle, 207 pips. Then you go down to the 15-minute, and you kind of land in the area of a 15-minute or a 5-minute, right? Sometimes even 30 minutes, right? And then this candle makes sense. This 5-minute liquidity candle here, we read it on the 5-minute. Yeah, this is the largest 5-minute candles. If you look at all the 5-minute candles in this area, this is the largest one. And this candle lines up perfectly with the weekly SR level. It lines up perfectly with this huge 30-minute candle that we started with, right? Or the 1 hour candle that we started with. And you also see in the London session how price tapped it. It pushed down, came back, tapped the liquidity candle, tapped 3430 and pushed down. All of those tells you that this is the right candle. This is the right liquidity candle, right? So again, just like drawing zones, um, identifying high liquidity candles is also going to take time, right? But once you uh, do about 50 of them, the next 25 get easier. And once you do another 25, then the next 25 after that gets easier, right? It just takes practice. All right. 30-minute candle is about to close. 1 hour candle is closing back. I'm not really keen on taking a trade here. I'm not. It's just ugly. The EMAs are just above here. EMAs, as you know, EMAs are liquidity level, right? EMAs right here is a liquidity level. So price can push up to the liquidity and push back down, right? And then the EMA is just like 35, 40 pips away. So even if there is 30-minute support here, I'm not interested. Price could push up here, and that's okay. I'm not comfortable taking a trade here just under the EMAs. Just 35, 40 pips under the EMAs. I'm not. I would have liked if price pushed down from 30-minute support here. I would have liked to take a trade to push up. That's about 30 pip move up, and maybe here 180 pip move up. Okay, great. I'm great. I'm happy that you got the answer that you were looking for. Uh, watch watch the past streams. That's the best way because it's the exact same method in every stream. It's the same analysis that I'll do. I follow these same steps. I look for H4 supply demand zones. Sometimes they are on the 1 hour time frame or on the 30-minute time frame, but majority of the time they're on the 4 hour or the 1 hour. And then I look to see if they're a high liquidity zone or not, and then I identify a high liquidity candle, right? And then the weekly SR levels, you see them right at the beginning of the analysis. They're always there on my chart, right? These are all the weekly SR levels. You can always take a screenshot of that. Those don't change. They rarely change. These very rarely change. They remain on the chart for months, right? Because price bounces between those levels perfectly. Sometimes they move up by $2-3, right? At the most a $5 change. A $5 means a 50 pip change, right? $2 is a 20 pip change. A dollar is a 10 pip change, right? And the rest of them, the BRNs, the EMAs, are all automatically drawn by an indicator that I use. If you want more details on the indicator, you'll find that in the group as well. You'll find the user manual in the group. If you go to the price action entry alerts under the price action entry alerts topic, you'll find the user manual in there. You just have to go and look at yeah. If you go in here, I think you'll go. As a way to look for attachments. Can't remember how you do it. Yeah, files here, right? You go and you will find, there you go. That's the one, right? If you go to files, you'll find it. This one. I think there's a later one. I think this is 2024. Yeah, so you can download the latest one. This one right here, right? And this will tell you all about the indicator that I use. It'll give you all the information that you need on the indicator that I use. It's basically the indicator. Think of the indicator like training wheels, right? It's just like training wheels. It just uh, does a lot of the heavy lifting. The indicator has signals as well. There is a signal which I've switched off here, but it does have it has a signal feature as well, where if you set this to true, it'll start showing you buy and sell signals where to use. But it's important that you read the entire user manual, and the user manual is very extensive. You'll have to spend a lot of time reading it and understanding and studying it, because at the end of the user manual is a trade plan. And if you want to trade these signals, you must follow that trade plan, right? You must follow that. You can use any trade plan that you like, but I recommend that trade plan to trade these signals. But you can use any logical trade plan, because these signals are based off volume and candle structure. So you can use it with any logical trading system, right? But I would recommend do not try to trade the signals without a trade plan. That's all I'm saying. it won't work. You got to have a trade plan, and you have to have some sort of high time frame analysis so that the signals confirm that direction. That's all it is. The signals will confirm the direction, and then you can take the trade. That's if you want to trade the signals. But I use the indicator mainly for um, the EMAs, the the session times, psychological round numbers, and then basically to tell me it's got a candle time. It tells me how long until the candle closes, the current candle closes. It shows me a pip value, how much is the current spread on gold. Those basic things, right? It's got a lot of features in it. It's got a support and resistance feature as well. It draws the most recent 30-minute support or resistance. You can set these to 30-minute, 1 hour. It's got a lot of tools in it. If you're interested, read the user manual. It's got a ton of stuff in it. Okay, 30-minute support form, but more or less a doji. Yeah, I'm not interested in taking a trade here. Price is just about 45 pips away from the EMAs. Yeah, not interested. As I said, if I'm to take a trade today, I would like to see price. There are two trade ideas, two possible trade ideas today, right? Um, Two possible trade ideas, and I've shared them before as well. I'll share them again. Uh, for buys and for sells, both, I'd like to see price break below 3407.94. That's the reason I put this line here. If it breaks below and a 30-minute candle, 30-minute support forms and a 30-minute candle closes above this again, 340794, or closes above the London low, then I'll look to take buys to push up, right? If price breaks below, I'll wait for a pullback to take sells to come down. Now, the pullback can happen after the 4-hour candle closes. So when the 4-hour candle closes, you'll have to see if there is a new zone here or not. This 4-hour candle is going to close in 53 minutes, right? So unlikely there's going to be a trade set up in the next 50 minutes. We'll just have to wait for the 4-hour candle to close. Okay, so I'm not going to be here for too long. I hope I answered most of your questions. If you have any more questions, you can post it in the chat, and I'll answer them before I leave. But tomorrow, um, we'll go over the next two setups, right? We'll go over the next two setups. Setup number 3, setup number 4, and that's what it is. That's setup number 3. That's setup number 4, right? And later on, maybe on Wednesday, we'll go over this. We can go over this, right? This is basically risk management. Okay, I'll be back in a few minutes, and then if there are no questions, then I'll end the stream. Sure, you're most welcome. You're most welcome. Yeah, so there's nothing happening. We're just ranging. 50-minute candles are just closing side by side. They're all around 40 odd pip candles. There's no volume in them. Yeah, they're all 38, 39, 35, 40, for 50 pip candles. There are no volume, right? There's just no volume. It's a Monday. The move was the Asian session move. 400 pip move down, right? That is as uh, it's been we've had decent volume in Asian sessions, sometimes even in the London sessions. But NY session first 2 hours not that much. Okay, I'll stay here for another. If here until the 15-minute candle closes, we'll call it a day. Now, again, I'll possibly be coming back to the charts later on because I think there might be a trade. Anyway, if there isn't, I'll come back in about an hour and check because I'm going to wait for the 4-hour candle close. I'm not going to do anything until the 4-hour candle closes, right? The 4-hour candle, because once the 4-hour candle closes, they're very likely, depending on where it closes. If it closes bullish, we could get a pullback down and then price to continue up, or a pullback up and then price to continue down. But it's best to wait another 45 minutes, 47 minutes for the 4-hour candle to close before deciding to do anything. So I'll come back probably in about an hour to the charts and see if one of the two setups that I've explained is going to play out, right? And those are the buys if price pushes down and a close back above for price to push up, or if price is going to break this. Now, if you break this liquidity candle and then push back up, that means we are creating a new low in the Asian session. If you break below here, we're creating a new low, right? We're creating a new low if you break below 3407.94. And that's one of the trade ideas that we discussed today, one of the trade setups that we discussed today, right? If price creates a new low in the NY session, then a pullback, 30-minute resistance to form, and a 30-minute tradable back candle close to go down, right? So that's the setup that I could possibly be looking for. Either that or this one here, where price pulls back to a liquidity level or a zone, and the liquidity levels are, you have the EMAs, those are two liquidity levels. Then you have a liquidity candle, that's a zone, and then you have another liquidity level, which is 3430, right? So the either this one or this one. These are one of the two setups that we discussed, and that could possibly happen today, right? That I'll be looking for uh, after an hour from now. After about an hour from now, I'll be looking for one of these two setups. Let's see if it plays out. It could even happen 2 hours from now, right? Later on, because there is no volume right now. We're very possibly waiting for NYSE open, which is in about 15 minutes, and then volume can come in maybe around after 10 a.m. EST, around 10:30, 10:15, 10:30 a.m. EST. You could probably possibly see some volume coming in. Right now, there is nothing. Okay, that's the close of the 15-minute candle. It's closing a doji again. There's nothing happening. Yeah, just closing side by side. 1 hour candles all closing sideways. So 1, 2, 3, 4, 5, 6, 7 hours we've moved sideways. Let's see. All right, I'll be back tomorrow, 7:30 a.m. EST. We'll do our analysis and see if we have a trade for the first 2 hours of the NY session. Hopefully there should be volume because tomorrow is retail sales, isn't it? Tomorrow is retail sales. Yeah, tomorrow is retail sales, so we should have some volume. Maybe not at retail sales, but maybe later on, after NYC open, or possibly after the 4-hour candle close, we could have some volume, right? So, but we'll draw our zones and we'll predict the setups and see if there is a trade for the first 2 to 3 hours of the NY Open. All right. Again, today's a Monday. Don't try to force a trade. Um, if there is a setup, right, either one of the setups that I've explained or setup that um, you've seen before and that could take, that could work, that could play out, then take it. Otherwise, don't force a trade. It's just the first day of the week. We could be having low volume today. All right. See you guys tomorrow. Take care.